I'm just gonna like freaking rage.
You all
Get
rage.
some movement.
Every minute with the fever dreams, I push a mind to a limit where it needs to be. I work blind, got vision I don't need to see. I'm picking mind over matter.
What does round 2 even mean?
It's round 2. We tried to do this yesterday. But I messed everything up. I completely messed everything up.
That seems to be the theme in our company.
Wow!
That is a major joke, everyone. I just want to let everyone know. Jeremy is his back always hurts. Let's just say that for carrying the team.
You've just initiated my imposter syndrome. Like, it's firing now. I am an imposter.
Today we are going through our 2022 budget. Dun, dun, dun. And we're really budgeting to see if we're GMI. That's kind of what we're trying to figure out today. And so we're going to go through that together and kind of see kind of how we did for Q1. And based upon that, how we're looking for the remainder of the year. So for income, total income, we have in Q1 about $32,000 in income.
Woo!
That's pretty good. Does
that mean we're rich or what?
Well, we'll go down to net income in a second. But one thing that you'll notice that's different than the last time we looked at our financials is our income is now broken out into different categories. We have bookkeeping income, which is our MRR, aka reoccurring revenue. We also have our onboarding, which is essentially historical bookkeeping or any onboarding setup costs. Oftentimes when a client comes to us and they need, for example, all of 2021 done, we'll say, hey, okay, so it's going to cost us this much to catch up the books to current, and so we charge for that. Then we have contracting. And contracting is essentially if someone, if a company comes to us and is willing to pay us hourly for, just like short-term work, that's what you see on this line. Then we have payroll services. That's only things that relate to the payroll services that we offer. Yeah, I mean, in looking at this, our bookkeeping income, on average was about $5,000 a month. Not enough. But that's okay because we had onboarding and contracting to kind of help us offset kind of like the lack of bookkeeping income. And when I say the lack of bookkeeping income, I mean that
The lack of Tesla money. That's what you mean.
That's exactly what I mean,
lack of
actually.
Tesla money.
So kind of going down the list here, we have our cost of goods sold. These are the costs directly associated with the income that comes in the door. So we pay for the QuickBooks expense for all of our clients. We also pay for Gusto, which is our payroll provider. And so we pay that for our clients as well. And that gets us to our gross profit. So our gross profit is essentially all the money that we have to pay our overhead. Things like advertising, software, payroll, all that good stuff. So when we look at, let's do a quick margin calculation really quick.
So that's revenue minus expenses divided by revenue.
Correct.
You need some parenthesis.
All right, so we are at about a 92% margin. Now, this is pretty good. Now, we are a service-based company, so this is almost to be expected. They're oftentimes the only direct cost really associated with service-based companies is like paying people. And since it's just me and Jeremy, we hope that our gross profit can fully pay for ourselves. And so we'll get down there and see what that looks like in a sec.
If we put payroll and COGS, our entire gross margin percentage would be like negative. Basically,
it would be negative.
Yeah.
That is correct. But yeah, so this is a very good margin. We expect to kind of maintain this, and it might teeter between about 90 to 95% margin. That's what we kind of hope to maintain.
So that's basically how much money we keep of the revenue that we make, right?
Pretty much, yeah.
Cool.
So, we have all the money that comes in, minus all the direct costs associated to that money that comes in, and then that's our gross profit there.
Got it.
moving on down the list here, we have, some marketing and advertising. We've really cut down on marketing and advertising, mainly because Jeremy's been killing it with networking with people, and that's how we've mainly been getting some of our clients.
I was going to say mainly because it didn't work. But yeah, that's also...
I like to put it a little bit nicer, I guess.
Thank you.
But software and subscriptions, this is... Sometimes we have yearly costs that kind of hit in 1 month. So that's why there's this huge swing in February. But on average, so far, about $700 a month in software and subscriptions. So pretty good there. Can't really change much about this because our infrastructure in how we run our company is ran through here. So these are kind of like fixed costs.
That is Practice Ignition included in that, or how does that work?
Yes, it is. Practice Ignition is included in this. And Practice Ignition, or I guess Ignition, which is their new name, is essentially it's how we set up contracts with our clients, get them onboarded, signed up. They pay through Ignition, and that's how we then get paid. Was I missing anything on that?
No, just shout out to Ignition for taking all of our money. Love ya.
Yep, love it. But they're great.
They are.
I think they make things pretty easy for us.
For sure.
But yeah, so I mean, that's like outside of this, I mean, that's pretty much where most of our money goes to. Of course, we have meals and entertainment. This is pretty much exclusively Wendy's. And so, yeah, we went to Wendy's a lot in March.
That's at least 40 times. Oh my God.
But going down the list, payroll.
Why are you getting paid so much? Jeez.
Honestly, we're probably paying ourselves a little bit too much. But that's okay. We can pull that lever, and we'll talk about levers in a sec. But, like how we were saying before, service-based companies, oftentimes the biggest expense is payroll, the human capital aspect of the business. Because, when you're providing a service, it's the humans that are providing that service. And so, yeah, payroll is going to be the heaviest hitter for us. And as you can see here, our payroll costs on average are about like $11,000 a month. So that's a lot. And this is probably the reason why we're in the negative. So yeah, let's go to the net income. Total net income for Q1 was negative $8,700. Congrats. We didn't have a whole bunch of onboarding. We didn't have a whole bunch of contracting, and our MRR isn't enough to pay for our payroll. $1,000, but
so why are we negative? Well, because we suck and we need to get good is basically what it sounds like.
We need to get good. In the words of our gym coach, just lift more. Just do better. But I think that it's important to recognize in like looking at these figures is that we're still investing in our company, and this negative balance that we see is, I see it as an investment in what we're doing. We obviously need to put food on the table for our families, and so that's why we're paying ourselves. But
I don't know, man. $9,000 of food seems like a lot, at least to put on the table, for our families.
I mean, yeah, it's a lot of Wendy's for sure. But there's also mortgages, rent. There's also, just living expenses.
Interesting too. One thing that we added that's coming up that's not in the first quarter is health insurance, because there have been some life changes in the past few months, and now we need to have health insurance.
Pretty much. It's pretty easy to forecast expenses. Generally speaking, they're very predictable. It's like a straight line, or it should be, and there isn't much variability in it. However, income and revenue is the hardest thing to project. Income is really just driven by other people wanting to sign on with us, and it's just hard to predict when people are gonna need our services. So if we book 3 clients at an average of $250-ish bucks per client, that gives us a growth rate of about $700-ish bucks for this month. And then that of course increases by 12% every month to where in December we're at maybe onboarding $1,800 of clients a month. Now this rate kind of stays the same. I expect this to maybe differ. So this is like this figure maybe might change as well. But the 12% increase I think is a fair fair metric that's like kind of conservative.
Yep.
We could go even more conservative here, and say like, okay, well, we're only going to grow by 2 and the average revenue per client is going to decrease. But yeah, I think that it's important for us to look at is like, hey, like let's put in a scenario here that where we are going to make it, because then what we're able to do when we do that is we're able to set goals for ourselves and say, hey, are we on track? Are we fitting within the guide rails of where we're at and where the company is going? And if so, then we're good. And if not, then we need to figure out how to make adjustments and pull those levers that we were talking about earlier. So in looking at this specific P&L, I think the 2 biggest things that jump out at me that we can control, or I guess we'll talk about one first, is payroll. Oftentimes with other companies as well, when a company is struggling for cash or when they're spending too much money, the first thing that they'll cut is payroll. The reason being is because payroll has an immediate impact on your P&L today. If we, say we're going to let everyone go, we are saving a ton of money. And although it's really hard for a company to do that and to make that decision, it's when a company is bleeding money, that's a huge lever that they can pull, and oftentimes the first one. It's really scary to have this level of balance of a bank balance, and I don't think we should let it get here. Honestly, I don't think we should let it get to here. And I think here is like the bare minimum.
Pushing it.
So like having $7,000 in the bank account is like, I think the lowest I really want it to go.
Yeah.
So at this point, we would essentially need to make up about $3,000 to $4,000 in cash, basically.
Yeah.
So where would that come from? That has to come from payroll. And so we would essentially cut our payroll. That would lower our executive salary expense. That would then lower our payroll taxes. We would also lower our 401k expense and our contributions that we are making. Pulling out $4,000, we're taking a pretty big cut. But I think that, we can survive it. So what can we do? Well, can we change this? Can we change our bank balance? Well, I think that we can.
You magically have a cash printer?
Well, actually,
Jay Powell?
Yes. Yes, we're going to hire Jay Powell to print a whole bunch of money for us. There's ways to get capital. One of the ways that we're actually looking into and have a meeting about today is getting a loan. The SBA oftentimes has very low cost, lower interest loans that can kind of help buffer your bank balance in times like this, or when you're trying to reinvest that money into the company.
Well, we do think that, eventually we're going to make it, we're going to be profitable, and everything is going to be fine. Hopefully that's what I keep telling myself at night. It would be easier to do that if there was a larger cash balance to draw from, so that we had a longer runway in case something happens.
Exactly. And two, building upon that, like how you were saying, it's like focusing on the pennies when we should be focusing on the dollars. When we're stressing about having a couple $1,000s in the bank, we're not focusing on growing our company. Right. Operating from a position of panic is not something that you want to be doing when running your business. And so to not be in a position of panic and rather being in a position of calm, that's what we're trying to get to. So a loan is definitely something that's very, very much in the cards, I believe, for us to kind of be in a position of confidence rather than like freaking out. Because that's kind of what this tells me. Like if we're at this point, we're freaking out.
I'm freaking out, man.
Yeah, but
good stuff.
But I think that so I mean, like I think that those two levers alone is good. And like how Jeremy was saying, I believe, both of us believe, that it's a matter of time before we get to a point where we're able to sustain our payroll, but not only that, but also to grow as well. So we're hoping that in getting a loan, we're able to kind of buffer this bank balance to kind of provide more runway, as you were saying. Yeah. So
let's hope we make it.
Fingers crossed. We need some thoughts and prayers.
Please send us your thoughts and your prayers. And your vibes. And your chia.
All the vibes. Yes.
And give me your Bitcoin. Just saying.
Yeah, I'm down to create a Bitcoin fund.
We should put a wallet address at the end of this.
Please donate.
I think that might be illegal, actually.